Stock splits. I get many calls from what is a stock split to is this a great time to buy? The stock is going to split in a month or two. Should I buy the stock? Thoughts on stock splits. Let's understand that the first things first, a stock split is just manipulating the stock price. And it's not always for a bad thing. I'll give you an example. Tesla today did a 3-for-1 stock split. So it was trading close to $915. And this morning that got split into three ways. So, the stock was worth $300 and change. So for somebody that wanted to buy a share of Tesla, they could do so without spending $900. They could do so at $300. But all things equal, a stock split just manipulates the stock price, doesn't necessarily make the company more valuable. So let me give you an example of how this would work. Let's say that we had Evan Mayer Enterprises. And Evan Mayer Enterprises, currently we have 100 shares out in the market and they're trading for $10 a share. So now we got a market capitalization of $1,000. Okay. So we have a $10 stock, 100 shares, right? 10 times 100 would make that company worth $1,000. Okay. Now, if I do a stock split and I do a 2-for-1 stock split, meaning for every one share of stock I have, I'm going to get 2 shares. The next day, the stock would be worth $5. Okay. But instead of having 100 shares, we would have 200 shares. So if we have 200 times 5, the market capitalization or the value of the company is still worth $1,000. So a stock split at the end of the day is manipulating the stock price down. Now, this, again, can be a very, very good thing because it allows people to buy a stock at a lot cheaper of a valuation. When Amazon was getting into the $3,000, $3,500 range and then did a 20-for-1 stock split, it made Amazon a lot easier for lower net worth people to be able to buy Amazon. And so it's a good thing overall when a stock splits, and it tends historically to do well versus the overall market. The stock tends to eventually go up. It doesn't always mean it's going to go up. A lot of times the stocks, right when the stock split happens, you can see the stock go down. Keep in mind that a stock split doesn't make the company more valuable. All it does is manipulate the price lower so that somebody that wants to buy it can buy it at a lower price. So overall, I am in favor of stock splits, and it tends to normally bode well for the company historically, that those stocks tend to outperform the market over a period of time. Obviously, a company's stock price goes up significantly. It tends to be a stock that people really like, right? So that makes sense. Now, there's also something called a reverse stock split, and that does the complete opposite. So back to my example of $10, okay, with 100 shares, that company's, Evan Mayer Enterprises is worth $1,000. I think, that my stock will do better if I do a reverse stock split and get the stock higher. And that means that now if I did a 2-for-1 reverse stock split, for every 2 shares I have, I would get 1 share, but instead of it being worth $10, it would be worth $20. And so a reverse stock split would be the same valuation because it would be $20 now for the share, but there would only be 50 shares. So 20 times 50 is $1,000. Companies tend to do reverse stock splits that I've seen historically are companies that tend to get into trouble and financially want to show that their stock price is valuable, more valuable than maybe what it is. Also, some of the New York Stock Exchange, the exchanges, they won't hold a stock if it's under certain dollar amounts. So if a stock drops under $5 or under $1, it can get put on warning and eventually can get delisted from the stock exchange. And companies don't want to do that. That's very bad news for those companies. So a lot of times companies that are in trouble, you can see them do the reverse stock split. Case, I gave you a real life example with Tesla. I'll give you a real life example with Bank Atlantic. That was a bank I used to work for a long time ago. They obviously during the financial crisis, all the banks got hit. They were a bank that got hit. They did some reverse stock splits because their stock price kept lowering and had the risk of getting delisted. And so they did that to kind of pop up the price a little bit which again didn't help the valuation. But maybe it holds people from selling the stock as much because when stocks get, into that $1 to $5 range and then are considered penny stocks, they get a bad reputation that the company is not stable. So overall, stock splits, I'm in favor of when the stock gets higher. I'm not in favor per se of reverse stock splits. I guess they've helped historically, or people wouldn't do them. And again, I think those are normally done for the purposes of not getting delisted on one of the major exchanges. There might be other rationale reasons for it, but again, those tend to be stocks that are not doing as well. So I hope that was helpful. And I basically wanted to make this video so that when you see a stock split, it's not necessarily a time to get excited. Though I will tell you, as a portfolio manager, for my larger net worth clients, it means nothing. For my younger clients or my lower net worth clients that are, in the middle of starting to save, a stock split can help get them into positions they might not be able to get into. So hope you found that useful and helpful, and have a great day.